Earnings season is still rolling on, so we're back with another earnings all-star chart video. And things are getting interesting this week because we now have a pause in the China-U.S. tariffs, still about 30% on China, 10% reciprocal on the U.S., so we'll see how that all shakes out. But we are hearing from some prominent companies this week, especially in retail, which should give us an idea of what to expect maybe over the next couple of months. Will these companies be pulling guidance like others did in the last couple of weeks because of the uncertainty? We still have other tariffs out there, and a big one is coming up on negotiations with the European Union. So we'll see what happens there. But let's dive in on some of these charts to get an idea of what we're expecting going into this key earnings week with some of these retail and consumer names. Okay, the first one is one of the big kahunas. The biggest retailer out there, other than Amazon, is Walmart. This is the Walmart price consensus and earnings surprise chart. Normally, we just look at the earnings surprise charts on these videos, but price to consensus is vital right here now that we are in this trade war to kind of see what's happening with those earnings estimates. And you can see Walmart has an excellent earnings surprise track record. Just these two misses back in 2021, 2022. So 11 quarters in a row. And yes, these green arrows are a little bit small. Last quarter was just 1.5%, but a beat is a beat. Even a meet is still impressive for all those quarters in a row with everything that they're juggling. But look at these shares sold off on the trade war, now rebounding. Can they bust out here? A lot is going to have to do with these two lines, 2025 and 2026 consensus lines. This is what's looking like for earnings, and also valuation on the stock. Not cheap, as it's trading near this all-time high, trading at 37 times this forward earnings. This is almost, much more expensive than what even Amazon is trading at. I never thought I'd see the day Walmart more expensive than Amazon, but here we are. A lot going on, and we're expecting some answers from Walmart here on what they see with the tariffs and the consumer, the all-important consumer. So this is Walmart, WMT. Then we're going to switch over to China. I normally don't show too many of the Chinese stock charts, but it is pretty vital right now to check in and see what's happening with them. This one is Alibaba, BABA, but JD.com, which is the equivalent to Amazon in China, is also reporting this week. So I'll be tuning into that one as well. But I wanted to take a look at Alibaba, and you can see it's missed twice in a row. So its earnings beat and surprise isn't as solid as what Walmart has done, but the street has never really cared that much about that. What it cares about more is what we're seeing here in 2025 and 2026. And these shares, while trading a little bit higher than this big, trend line here going all the way back to 2022, is not that expensive. It's the opposite of Walmart here, trading at 11 times, because the Chinese consumer has been struggling for the last several years. But are we starting to come out of it over there, maybe before over in the U.S.? I don't know, but I'm going to be tuning in to both JD and Alibaba to get some kind of sign on what is going on in China with those consumers. But this one, another key one to watch on retail, Alibaba, BABA. Then I'm going to switch it up just a little bit, but another important company for the tariff situation, Deere and Company. This is the farm and construction equipment, and you can see earnings surprises is great. Just that one miss there in 2022 back here, and it's a small one, 7%. But otherwise, it's beat all in here. But the shares trying to break out again here to 5-year highs which is a little disconcerting given what's happening with the earnings. Down, down, down. Earnings expected to be down 26% in 2025. It is supposed to rebound a bit. You can see this 2026 line is above the 2025. So a gain of 12%, but this is still well below even back here, 2022's consensus. It's below that. So still a struggle on the earnings side. It's trading with a PE of 26 as we've got the earnings on the decline. We've got the stock near its all-time high. So those two things just don't really add up on the valuation side. But I'm going to be watching Deere to hear what they have to say. Remember, they're not just China. They also big in Europe and South America. So how are the tariffs impacting globally with Deere, and then the U.S. farmers struggling as those Chinese tariffs still remain at the high level at 30%, even with this pause. So a lot going on with Deere. I'm going to be tuning in, ticker DE. Then we're going to switch back over to the consumer on the retail side. And we're going to see Birkenstock Holdings. I'm not sure I've ever covered this one on the Earnings All Stars, but this is the shoes. And this is out of Germany. And you can see just a crazy chart, up, down, can't decide. It's beat 3 out of the last 4, however. So I am liking that. But these have been small beats. Last quarter, well, I guess not too small, 18%. Just that arrow looked a little bit tiny to me, but I guess it's not really tiny. But look at this earnings growth that's expected. Earnings this year expected to be up 34% here because the Birkenstock's still really popular. But what is tariffs doing? Now, I'm not sure where Birkenstock is manufacturing, probably globally, if they're any like any of the other shoe manufacturers, but there's tariffs going on all over the place. So I'm sure there's some impact there. But what will it be? How is the consumer responding? I don't know. These shares up off the lows as well, trading at 29 times, but you do have this strong earnings growth. So maybe this is one to keep on your watch list this week to find out about the consumer. So that's Birkenstock, ticker BIRK. And then we're going to wrap it up with one I talked about last week, but we didn't really cover. I brought it up when Sweet Green was going to report, and they had negative same-store sales. And will Cabba do the same? Cabba has been reporting a little bit better results than some of the others as it remains a red hot restaurant chain. And you can see they did finally have their first miss last quarter, just down 16% miss there, but otherwise beat all the rest of the quarters. These shares are up off the lows as well. And 2025 earnings up 30.9% here year over year, but the earnings has come down off these highs here. So yes, this is an interesting one because people just love Cabba. They are still in expansion mode, but what is the consumer doing here? We're seeing a lot of pullback in these kind of faster food chains and even in fast casual, but it's been kind of hit or miss. Some are seeing a bigger pullback than others. What will happen here? I'm pleased to say Cabba is opening another location here in Chicago. They have one currently in Wicker Park neighborhood, and they will be opening up in Streeterville, right across from Timothy O'Toole's, if you're familiar. So I'm going to be heading over there to try out this red hot chain. I did go to Wicker Park once to try it out, and it was so crowded I couldn't go in. So that could be good things, but how is it doing in the markets where it has a lot of exposure? We're going to see CAVA is the ticker here. So a lot going on this week on the consumer side, retail, restaurants, tariff stocks, what is happening. And then we're going to pick it up with a few more tech names going on next week. So I'll be back next week with some more earnings charts.